Chris Preston.
And I'm Brad Simmerman.
Welcome to Street Check, the best two-person podcast in the history of Cabot Wealth Network. Brad, Labor Day is nearly upon us, which means football season is essentially here. College this weekend, pros next week. Is there any hope for the Arizona Cardinals this year? Your team out in the desert there?
No,
Okay. Who's their
no,
quarterback? Is it back to Kyler
it's
Murray?
it's Kyler Murray. I think he's like, at least from a fantasy standpoint, like a top five quarterback anytime he plays, but they'll be competitive, but they're not going to be great. Marvin Harrison Jr. is getting a lot of press coverage and looks to be the real deal. So I'm excited for that, but they're not going to be contenders.
Yeah. My Bills should be good, should be contenders, but will they, will they make the playoffs and lose to Patrick Mahomes? Probably. That's what they do most
Who's
years.
going to catch balls out there?
They did get a rookie or draft a receiver in the first round from Florida State. That Coleman supposed to be good. Yeah, Stephon Diggs is gone, but
Gabe Davis also gone.
he's gone too. Yep. That one might hurt more. Diggs was a number two receiver acting like a number one receiver with the ego of a number one receiver, and that was creating problems. I think he had fallen off for 3-4 straight years. It was really good a few years ago. He was a good Bill, but it was time. Yeah, we still have Josh Allen, so he can just run if all the receivers are covered.
Yeah, it works for Baltimore.
Exactly. Yeah, until the playoffs. Same. I guess we just got to the root of those two teams' problems when it comes to playoff time. Okay, that's it for football talk for the week. Let's get to investing. Brad, give us the rundown for this week.
All right, so this week we are going to talk about Nvidia's earnings report. That was the 28th. We are going to talk about cannabis going up in smoke on some DEA news, and then we're going to talk about SMCI, which got hit by a report from Hindenburg Research, a short firm. After that, Mike Cintolo of Cabot Growth Investor and Cabot Top 10 Trader is going to join us. But before we get to all that, as always, Chris, you are up to defend I don't know if it's scorching hot, but it's a pretty hot take. Right. Stocks will fall 5% in the next 6 weeks and be higher by Thanksgiving. You have 90 seconds. You may begin.
Yeah, so the reason I'm saying this, and it's at least 5%, reason I'm saying this is because it's happened each of the last 4 years, or at least the stocks have fallen each of the last four Septembers and Octobers, with the bottom coming in October every single year, and then have bounced back to new highs than they were before September. So on this date, the Friday before Labor Day, every single year by Thanksgiving. September, historically is the worst month for stocks by far. Wall Street returns from its vacations, the Hamptons or whatever. They sell off their laggards, and it sort of, sets the tone for what a lot of stocks dropping in price. Average decline minus 1.17% in the S&P, dating all the way back to 1928 in the month of September. Last year, 8.8% decline with an October 27th bottom. That's in September and October. 2022, 8.7% bottom or pullback. October 14th bottom. 4% pullback in 2021. October 1st bottom. 4.5% pullback in 2020. October 30th bottom. I think we'll see the same thing this year. Presidential elections and the uncertainty surrounding that only makes things then the angst around investing in September, October worse. So I think we'll get it, especially with market having climbed back to all-time highs or near all-time highs after the early August swoon. I think they're due for a pullback, but I also think they'll bounce right back because there's a bull market and there's no reason for them not to.
All right, time.
And also, I mentioned the election. The pattern is, as I mentioned on here before, that usually once the election is over, stock prices take off, regardless of who wins, what party wins. It's just the market wants that certainty, wants an answer. Barring, a 2000 election situation where, the hanging Chads and the you don't call it a runoff. What was it called? Whatever the Gore Bush situation was. We didn't know the winner until like January.
Right.
Yeah.
Well, so just looking at the chart, looking at the NASDAQ, a 5% pullback from here only brings us to where we were on drum roll August 12th.
Right.
So it is not I mean, it wouldn't even put us back at the August low. So it
Yeah.
wouldn't be a catastrophic sell-off by any means.
I
Be,
mean, I'm saying S&P 5%,
yeah,
it's only gotten to 2 of the last 4 years, although each of the last two are more than 8%. I guess if I'd said 8% again, that would have been a more scorching take. I don't know if I quite believe that though,
yeah,
especially after it just pulled back 8% late in the second half of July and first week of August. But I do think it'll pull back. And, important thing is just to remember, I'm sure September will have some, scary moments, but important thing is just to remember that this happens every year now,
yeah.
and that stocks will bounce back in November. They always seem to. And, you add in Fed cutting rates and the result of a president or election being over, there's all the more reason for the bounce back to happen in November.
Yeah, I think it's a good take. History doesn't repeat itself, but it rhymes, and
Yes.
seasonality is sometimes a thing. But with the September sell-off, that is one where it's not like the Santa rally where it's like, yeah, it seems like it's arbitrary date picking. September seems to actually
Right.
reflect actual sort of underlying underlying things. Like you said, a lot of people coming back, taking profit, gearing up for Q4, starting window dressing, all that stuff.
Yeah. And okay, so as I mentioned, minus 1.17% on average, dating back almost 100 years in September. Can you guess the second worst month on the calendar?
December? No. January.
Close, February,
Okay.
and minus one or minus 0.4%. Minus 0.14%. So there's nothing close to
Yeah.
September. It's definitively the worst month on the calendar. And we should just expect it. And, you know, you'll have better prices by the end of September or, mid-October, whenever the selling ends. Um, okay, let's get to our big three. Number one, Nvidia earnings. They were good enough. They didn't sink the market, and they also didn't. I think we sort of forecast this last week. Thought they'd be good enough, maybe probably beat, which they did. But it wasn't a big enough beat. I think at this point, Nvidia set the bar so high that they have to trounce expectations to really lift both themselves and the market, especially how high, especially Nvidia's, it already more than doubled this year. And then the market, like I said, going into the earnings on Wednesday was already, close to getting back to its July highs. There's what was over 30 million or 30 billion dollars in revenue reported, up 122% year on year. I mean, it's a lot. Fourth straight quarter of triple digit revenue growth. There's nothing wrong with Nvidia, but like we said, I think uh, it's a known quantity at this point. The wow factor is gone. Unless they've gone like 222% revenue growth or something like that. It's just, it's accepted that Nvidia is this incredible growth story, and it's so accepted that it was already baked into the share price.
Yeah. Yeah, 100%. The whisper numbers that I have come across were that Nvidia basically needed to guide for third quarter earnings closer to 37 billion. I think their guidance was 31.7, 31.8, somewhere right around there. So,
It
yeah,
came
it's
in
a
at what, like
profitable quarter.
32, 33 range? Something like that.
Somewhere right below 32, I think is what their guidance was
Yeah.
for Q3.
Oh,
Um,
for Q3, sorry. Yeah. Yeah.
yes.
Yeah.
And this quarter they reported 30 billion against 28.86 expected, and
Yeah.
then their forward guidance was a little bit lighter than what analysts were looking for. I listened to their earnings call. Margins are tightening a little bit, so they were at like 78% margins last quarter, I believe, and they had guided for like 75% for the full year. But now, because they were 75 in Q1 and 78 in Q2, they're probably going to be in the mid 70s. There were some analyst questions about that where they're saying, hey, so we're just doing the math. It looks like you guys are going to be what, like 71, 72. And they were sort of uh, obfuscative about it, saying, well, we don't have the exact same numbers that you do. A lot of time on the call was spent on talking about accelerated computing. And then one thing, and if you are so interested, you can read about this in a daily that I wrote that'll get sent out to your email inbox on Tuesday. One question that came up like 3 times in my call was the ROI, the return on investment of NVIDIA questions. And like that's not fair to ask Nvidia, right? You don't typically ask sellers what kind of return on investment their buyers are getting. But
Hmm.
they were pretty quick to talk about cost savings as being a big one with accelerated compute saving on electricity spending. And then they pointed at potentially small startup companies renting uh, compute, so renting resources from their customers. But the fact that that question came up is pretty relevant for investors that have been sort of riding the AI wave because the street and I mean Goldman Sachs wrote about this back in June. Everybody sort of is now at a point where they're wondering, are the companies that are buying Nvidia's chips making enough money to keep doing so? I don't think it's trickled down to most retail investors yet. It's probably like a question in the back of their minds, but it is explicitly being asked by buy side analysts and by institutional shareholders. So be on the lookout for signs that Microsoft, Meta, Amazon, right, your big spenders on the Nvidia chipset, that they're actually making money from the spend, because otherwise that money fire hose is at risk of getting shut down or at least turned down a little bit.
Yeah, I mean the AI phase has gotten to the, you know, AI cycle, I should say, has gotten to the results, show your results, prove it phase.
Yeah.
And yeah, I mean, I think the way you framed it was a good article. Is you'll be able to know, you'll be able to tell if they come right out and say it, or say we've earned, X amount. Like them talking around it tells you that they have not earned their investment, or, have not gotten a return on investment
Yeah.
yet. Um,
And
even
it's
even if
something.
they're getting close to it, I bet they would start talking about it.
I would agree with that because it's something that I think Microsoft knew was going to be a question because of how they choose to segment their results. They
Yeah,
don't carve out AI revenue when they are reporting their own earnings. They just lump it all in with their Azure cloud computing. So it doesn't
yeah,
get segmented out or separated from normal sort of like data center processes or anything along those lines. I think they knew that it would be a question, but if they come out and they start celebrating the fact that their, revenue growth from AI is like 150% or 200%, or if they start carving it out, like that's the ultimate green light for it. If they don't, you have to look a little bit further down the food chain.
yeah,
Um, but it's something to be on the lookout for because institutions and big buyers are on the lookout for it.
yeah. And big picture, we made it through Nvidia earnings without. I guess there was always the prospect that it could have, lifted the market like it has done several times in the last year and a half, 2 years. Um, but I think just don't screw things up was kind of the hope, at least yours and my hope, and it didn't. So we made it through that. It wasn't a hurdle, but made it through that date without any damage being done. And if anything, it probably helped more than hurt. Okay. Number two, this opposite end of the spectrum. Cannabis stocks imploded this week again, down about 10% as the rescheduling date. So the biggest sort of dangling, carrot that's been out there for the cannabis investors and cannabis stocks is that rescheduling from marijuana cannabis from a class 1 to a class 3 drug. So class 1 lumped in there with what, heroin, cocaine, acid, all the worst drugs you can think of, to a far less harmful class 3 designation, which would open up um, all sorts of avenues for the industry. Um, that was the theory, was that was going to gain final approval before the election. But now they have set a date for after the election, December. December, do you have the exact
Second.
date? Second. Okay. You know, that's this year, but it's after the election. And I think there's a lot of disappointment that's not happening before the election. So stocks sold off. So I guess, so Michael Brush, who runs our Cabot Cannabis Investor advisory, he was disappointed, of course, but he talked about, he thought maybe that it might happen in October, not happening anymore. I think that probably takes the prospect of another potential catalyst out off the table in the Safe Banking Act. I can't imagine if they're not rescheduling before the election that that's not going to happen either. I don't,
It, it
unless you disagree.
it could like they're distinct insofar as you could have safe banking without rescheduling, but because it becomes a political question, why expend the political capital to fight for safe banking when you can expend the political capital to try and get your preferred candidate who already has the policies that you like, try and get them elected, right? Like,
Right.
so like, I'm trying to think, so somebody going out and saying, okay, well, I'm going to endorse this safe banking bill. Well, instead, they'll just come out and say, no, I'm gonna support Kamala Harris and the Harris Walls ticket for president, and that's where you're going to get your cannabis reform. So it becomes more valuable to use as a political chip. The big thing with the lack of rescheduling, especially if it's a fight that drags on, because Michael was indicating that these are fights that can drag out for like years in the court,
Yeah.
is the 280E, the IRS rule that prohibits them from deducting expenses.
Yep.
That would have been like an immediate boost to the bottom line because you can start writing off all these costs that you couldn't before, and it makes your earnings numbers look a lot better and your income numbers look a lot better. There have already been a number of companies that have basically said, we're going to write these off regardless, and we'll see you in court. There's a handful of individual cannabis companies that have made that choice. That becomes a riskier proposition without rescheduling on the table. Like, because let's say it takes 3 or 4 years. Do you really want to be running with a 3 or 4 year tax deficit while you fight this out versus what before would have been, hey, maybe that we're only running a deficit for 6 years for what we're paying the IRS, or not 6 years, 6 months for what we're paying the IRS. Okay, now it's been rescheduled. Okay, so they'll apply it retroactively, and now it's not an overhang. So that it does introduce some risks to just accounting practices, but it seemed like it was just bad news that caught everybody off guard.
Yeah.
People in the industry, lobbyists, analysts, investors.
Michael was caught off guard, and he rarely is.
You know,
Yeah, it's clear that very few saw this coming. It's just in terms of cannabis stocks, the MJ, which is the ETF that sort of the best proxy for cannabis stocks, they got knocked back basically to matching its 2024 lows. So it's not like uncharted territory. It's hasn't sunk below previous lows from this year. So if you want to take a flyer of the small position on a cannabis ETF or stock, now wouldn't be the worst time to do it. But you also can afford to wait too. Whereas before, with cannabis stocks were already pretty low because
yeah.
the air was sort of coming out of the rescheduling balloon earlier this year when it first was recommended by the HHS.
Mhm.
It sent cannabis stocks to their highest point in a couple of years. They'd since sunk back, well, all the way back to early 2024 levels. But there's no rush now. You have, unless you think safe banking is going to happen, you have basically until December. I guess if Harrison Waltz wins, I could see a big bump there.
Yeah. Or
But
if Trump or Republicans come out and say we are now for rescheduling and legalization. So if there's a political pivot there,
yep,
I could see some potential, but messaging has not been super consistent from that side of the aisle. So I don't know that you're going to necessarily get a big cohesive push on something that already sort of favors Democrats.
right. Okay, let's get to number three quickly. Super micro computers, SMCI, was victim of a short seller earlier this week. Stock fell like another 25%, at least in one day. It was like 25%, but it was falling even before that. SMCI was a sort of a late blooming AI darling. earlier this year, first half of this year, but it's really come crashing back to earth. Um, Hindenburg is the name of the short seller who has a good track record. I'll let you speak more to that and sort of the implications.
Yeah, so Hindenburg Research is a research company that predominantly comes out, and they do sort of innovative, at least insofar as they source really well research on companies. So they're not just a trumped up accounting firm. Um, they came out and they made a bunch of allegations against SMCI. The most notable being that they were engaged in a lot of self-dealing, that they were paying companies owned by family members that those companies were buying supplies from SMCI and improving them, and then SMCI would buy them back. They had previously reached an SEC settlement and terminated some executives because of accounting issues that caused them to pay fines to the SEC. Those executives were hired back 5 years later. The move in the stock was about a 10% decline from before the report, and then in the 2 days leading up to it. So it may have gone out to like subscribers early or something like that before it was publicly disseminated, but it dipped about 10%. The big move came the next day, which was on the 28th, when SMCI announced that they were going to be amending their returns. They're going to be amending their filing so they wouldn't file their annual report on time.
Yeah.
As far as
It's not how you make the short sellers go away.
exactly. Now, as far as Hindenburg goes, they have a pretty solid reputation in the industry, and their performance numbers are actually pretty good as well. Their 10 targets in 2022 declined an average of 42%. Their 7 targets in 2023 declined by 36%. Of the something like 67 positions that they'd initiated in the last few years, more than 50 of them had ultimately declined in value. They say that they pop bubbles where they see them.
Mm-hmm.
So they have a good reputation, but that decision to delay the filing is really just validation for it. And the problem is all you can do as a publicly traded company is say we're refuting this, but we're also delaying our filing. And then it becomes a question of, all right, well, why are they delaying it? Is every allegation true? Is there one allegation that may be true? Is the way that they're presenting their numbers implying that there's more to see there, right? Like they can't do anything concrete to address their decision to adjust the numbers. So they just open themselves up to a ton of speculation on what prompted it. Yeah, bad look. SMCI is a low float, relatively small. I mean, it's $30 billion company, but it's relatively low float, so it's subject to a lot of volatility. It has bounced back in the last couple of days, at least, but I've never seen the attraction to it. It's they make server racks. Like I could fabricate a server rack right now. It's not going to look good and it's not going to work great and it won't have liquid cooling, but it doesn't have the same kind of like moat that somebody like Nvidia does, where they've got like the CUDA architecture and they've got this IP and all this stuff. It's like, all right, it's a server rack.
Yeah. And just on short selling, it's not always a death sentence. Herbalife years ago, remember that company was it's like $60 a share in early 2019, and then Bill Ackman um, uh, issued a pretty scathing short selling report. It never recovered. It's down to like $8 a share now. Luckin Coffee, though, which is the budding Chinese coffee giant, or competitor to Starbucks even over there potentially, that got slammed. I think it was like 2021, 2021, after it was going gangbusters for a couple of years there. They have slammed for shady accounting practices. But it's since, and stock plummeted, but it's since recovered and is having a really nice year. So we'll see what happens at SMCI, but I do agree with you that it's just too much risk. The volatility is not worth it, I don't think, even before the report.
Yeah, and if you're not familiar with Hindenburg, I would recommend for something that's a little bit more recent, where you can sort of see the timeline and the path that or the response that stocks have had. Look at Icon Enterprises. That was one where they came out with a report in March, and then it was later disclosed that he improperly raised, I believe, 400 million, or at least that was the allegation. All of this, whatever I'm saying is these are the allegations as I understand them, so I don't have any inside info here. They also came out vocally against Adani Group, which is a Indian multi-billion-dollar group. It's like India's third richest man runs it, and there was a lot of self-dealing allegations there. But those would be the two where if you're like, hey, I wonder if there's anything here, you can read the report on SMCI by Hindenburg, and then if you want to see what their track record looks like, IEP and Adani Group are good places to start.
All right. Let's wrap up Big Three there and welcome on our guest for today, Mike Cintolo, in just a second. All right, we welcome on Mike Cintolo, Cabot's Chief Investment Strategist and Chief Analyst of our Cabot Growth Investor and Cabot Top 10 Trader advisories. Mike, it's been a tale of two Augusts, obviously, particularly for growth stocks. There was panic first week of August, NASDAQ down 13, 14%, S&P more than 8%. But here we are at the end of August, heading into Labor Day, and stocks are almost back at all-time highs. What are you seeing specifically in the growth arena? Has the recovery been as swift there, or has it been a bit slower?
Yeah, it's kind of like the rest of the market. It sort of depends where you look. So for growth, I'm very impressed with individual stocks, and some of them are, I would say, most things that I watched, and really most things out there, topped out sort of, they had a great November, December, January, February, maybe March, sort of thing. But then they kind of topped out there. They had the spring correction. They never really kicked into gear in June, July, because that was like 15 stocks that were doing really well, all the mega caps. Yeah. And so it looks, this is my maybe a little hope, although hope's a four-letter word, but my hope is that that little mini crash was almost like the final sort of second shakeout, almost like a double bottom, So individual stocks, what I'm trying to say is they look pretty good. I still think that some of the, I'm saying old, but I just mean like a lot of the chip names that have been running for 15 months from like the spring of 23, I still think they look, I don't want to say suspect, but just tired. I mean, they look more tired. They probably need more time. I'm all for being wrong, and they just spike from here. That would probably be good for my stuff too. But so I think growth is, the measures that I look at are a little bit weaker than the S&P New York Composite, but a lot of the individual stocks look pretty peppy, and they're acting constructively. And I just recorded the video, the weekly review, and I just think we've had this sort of little pullback here. If we pull back, we could do it another week or whatever, and if we can really come out of here with power, I mean, I don't want to say it could be go time, because you never know. It could always reverse. But I mean, I definitely think, I certainly would be buying quite a bit, I think. So I'm optimistic, but I'm trying to time it out so that we don't get too far ahead of the game.
Yeah. I talked to the top about how each of the last four Septembers and Octobers, stocks have been down. S&P's been down at least 4%. Last 2 years, down more than 8%, with the bottom coming in October. But then all four times, the S&P has been higher than it was before, on the day before Labor Day, by the third week of November.
Okay, that's cool.
So is that sort of aligned with what you're thinking? It was like we could see, another pullback. I mean, given that we just had, like I said, 13, 14% in the NASDAQ, 8% in the S&P, I'd be surprised if there was another one that big a correction. But I mean, are you, sort of anticipating the usual September pseudo swoon followed by, but the next big move being up?
I wouldn't say I'm anticipating it, but I'm open to it. Honestly, I didn't know that, Chris. So the fact that you just said the last four were like that, it makes me think maybe we're due to take off on the upside. That makes me more optimistic. But no, I think I don't want to say it's a coin flip, but a lot of the bad news has been forgotten. Sentiment is still, I don't want to say it's super complacent, but it's hard to tell right now because it's Labor Day, it's vacation and barbecue. People are thinking about other things, but school starting up. So, but I think sentiment's a little bit like we could have something come on the scene whatever it is that people say, well, wait, I wasn't thinking about this, and that could hit the market. Yeah, I agree. I just think, yeah, whether we I'm just wondering if we need to build more of a bottom, and if I'm going to say Nvidia, I don't mean Nvidia in particular, but if this chip stock and that big mega cap stock that have had big runs need more time, and that weighs on, say, the Nasdaq as a whole, it can just make things choppier and maybe more digestion. So that's what I'm keeping an eye out for. I mean, we come in next week and we're, it's Tuesday and things are up on huge volume and 5 things I'm looking at are breaking out. Like, I'm buying, you know what I mean? So I'm staying flexible.
So earlier this month, you wrote a daily, and I think you'll have to correct me on this. I don't expect you to have the exact numbers. I think you said you were like 65%. We probably get like a W recovery where we come back up and we get near the highs, but don't quite get there, and then bounce back, drop and bounce back. And then I think you were like 20%. Maybe we get a bottoming process, and then it was probably like 15% into the V bottom. Where are your percentages now?
Yeah. So I was thinking odds strongly favor a bottoming process. Could V bottom, and then the least likely was like, hey, this is the start of a bear phase, which is possible, but just there wasn't much other evidence to support that. Now it's no. I mean, again, there's just a ton of earnings moves in some of these stocks that have been basing out for 4 or 5 weeks. A shakeout near the end of the base is classic. So the action of those stocks makes me think the odds favor that we've bottomed, and that, we're going to go higher. I guess I don't want to say V or W because that kind of means we're going to go straight up from here, but I think there's a pretty good chance. I think there's the 2 chances I'm looking at are like, do we get going in the next week or do we get going 4 weeks from now? That's kind of my main thought right now. Not that there aren't other possibilities.
Yeah.
But those 2 possibilities are basically 50-50 at this point. So I think there's a much higher chance that we have bottomed, the worst is over. We might have some messing around here, but I see a lot of stocks that want to go higher. I don't know if that means for 2 months or for 6 months, but I see a lot of stocks that act really peppy. And there's been no selling. That's the other thing. There's been no selling after that up move. And at this point, I would expect to have seen that selling come in the market and some of these stocks. Instead, they're just very, very tight. They're creeping higher. So yeah, that's what's on my mind right now.
How much weight do you give to, the Fed is all but certain to start cutting rates next month? I mean, Powell all but said it. Now that the Fed, seems likely to start cutting rates in a few weeks, how much weight do you give to that in your sort of bull case for the market?
Right now, not much, but it's definitely a bigger picture positive. I remember when this is a totally different situation, but I remember when the market was crashing, pandemic and all this, and the Fed reduced rates to 0 and started buying everything that wasn't nailed to the ground, and the market still kept going down. I remember slacking with Jacob, and we were both like, "Yeah, this is going to be super bullish. It's just not right this second." So the fact that the Fed is turning into a friend, I think, does give tailwind to the overall bull market. Probably more so the broad market, small caps, I hope, because we have a position in some of that stuff. But that's kind of what I'm thinking. But in terms of the timing of the next 3 or 4 weeks, not much, because it might already be discounted. Honestly, it probably is. So if they only cut 25, maybe some people are disappointed, right? So it's like, but I think long term, it's definitely a tailwind for sure. Yeah, definitely.
So you mentioned small caps as being something you've got exposure to. One of the things that Chris and I were talking about before, when we were doing our sort of planning meeting, was that every once in a while you'll get a sector where it seems to come out of left field. The thing that came to mind was like home builders, late last year, earlier this year. Are there any sectors that you're looking at right now that we would be surprised by or that would be unexpected?
It's a good question. I can't say there is right now, but it's a good question. I know where you're coming from, where it's sort of like home builders, you wouldn't have expected it a year ago, and they've had good runs. But no, right now I'm seeing, and not to repeat myself, but I'm seeing like software had a great run for the first, November, December through March or whatever. And now I'm seeing some of those names perk up and they're ready. They look ready to go, like they want to go, whether the market lets them or not. Some of the medical and biotech stuff, which is always tricky, but nothing like totally surprising. But we'll find it in top 10. I mean, we're always screening. So if, top 10, if it shows up top 10, we'll find it. But I can't say from a sector perspective, there's anything totally new or out of the ordinary at this point.
You have had a couple in your portfolios. I won't say the names, but you have had a couple, sort of up and coming restaurant retail cookie cutter type stories in there. Is that sort of a subsector that you're bullish on, or is that more just like a, case by case individual stock basis?
Yeah, generally speaking, yes, but yeah, it's still been kind of case by case because there's, it's one of those things where there's four that look good, and then all of a sudden one reports earnings, and it's like, well, now there's three that look good. So
Right.
it's not the market's not right now. I don't see it as like a group move or a wave sort of thing at this point, right? It's not like the market as a whole or this huge, 40% of the market is just going, it's kind of, this is going, that's going, some defensive stocks look good. Like we're still in that process, you know what I mean? And that's what I'm talking about is I'm looking for that to kind of get into unison where it's like, at least for growth stocks, where it's like, okay, all these different stocks among these different themes just start to go because Fidelity is like, probably because they've already accumulated their position and then they goose it so that they can make money on it, that sort of thing.
How much attention do you pay to the cash on the sidelines, like money market fund balances, stuff like that?
Good question. Yeah, but it's a background. So some of the, I follow some of the, I don't know what I call it, big picture sentiment, I guess, long-term sentiment stuff. So like the Bank of America has a monthly sentiment survey and stuff like that. The money market fund thing in particular can be a little, because I used to actually follow that, Brad, more closely. But I think when rates started to change and stuff and QE, that kind of messed with it a little bit because rates are up at 5%. Guess what? A lot of money comes out of these banks, right, that are yielding zero and goes into 5%. Like, why not? I've had a lot of friends call me in the last couple of years being like, can I just put money in this and get 5%? I was like, yeah, you should do it, So I follow it, but yes, I do think there's a lot of dry powder out there because I don't think big picture sentiment to me is like a 4 or 5 out of 10, if 10 is super bullish. So I just think there's definitely money on the sideline with people who are playing it safe.
Yeah, that's something that Chris and I have talked about a fair amount with like the big institutional buyers right now. They seem pretty content to have what they've got, with maybe a little bit of like profit taking here and there. And, they're sending out some feelers, but it doesn't seem like you've got exactly what you've been saying, that sort of consensus sentiment where it's like, we need to be piling in.
No, that's what we're looking for. Yeah, no, I agree with you. I think I don't want to say feeling out. I should come up with a better term for it, but it's kind of hopefully it's an accumulation stage where you're buying, but then you're not doing, you're kind of trying to get on dips. You're kind of keeping it in a certain range.
Grab 10 million of it.
I definitely think
to
that's
throw it on your watch list.
Yeah, exactly. Nibble here. A lot of positions, but small position, that sort of theme. So hopefully that changes. But like I said, I don't know if it's going to change next week or October 15th. That's kind of what I'm trying to figure out here in the days ahead.
Okay. So the bull market resumes October 15th is what I'm hearing. I'm going to note that down.
1:35 p.m., man. There you go. So.
Yeah, there we go. I mean, you've been with Cabot for what? More than 2 decades now? Quarter century?
25 years.
25 years.
Doesn't feel like more than 32 though. So
yeah, that's a lot of bear markets in there. But he's also lived through a lot of bull markets. Can you remember one? We're 22 months in, which doesn't make it all. Like the average bull market is like over 60 months long or something like that. It's actually technically the second youngest right now. Can you remember a bull market that's felt less bull markety than this one, at least just to sort of the average, investor on the street? It doesn't feel beyond the mega cap tech stocks. It's just, it hasn't felt, other than maybe when you talked about last November through maybe through January and a couple other pockets, it hasn't felt like a true bull market certainly not for all 22 months.
Yeah, from my study of history and experience, not really. I would say there's some. I don't think it was this. It's not this bad, but like the 2014 to 2015 timeframe, it was kind of like there was some of that June, July feel, except for like a year where it was like really, it wasn't even like trending, and it was not that many stocks. Like I think we had like one, and we had more than one winner, but I mean we had one like real winner during that time, even though supposedly it was a bull market and the market was strong. Yeah, it's just been tricky and challenging. I'm sure interest rates and the after effects of the pandemic and fundamentally, I mean, have had an impact on that. But no, it's been pretty unique, a little frustrating at times, but no, I do think last October, we turned the corner. Fed is going from foe to friend overall, and I think the better times are ahead of us. Not that we're going to go up for 5 years in a row or something like that, but I definitely don't think it's like the eighth inning or anything.
Yep. Last question. Brad and I at the top talked about our NFL teams.
Well,
So give you equal time here. My Bills. I'm somewhere in between optimistic and pessimistic. We'll see. I let Brad talk about his hapless Cardinals. So if he can talk about them, we can talk about any team. Pats. Actually, so their over under I think is 4.5. I heard wins. You taking the over?
that was one of my, so I'm not, I'm a terrible sports bettor. So I've purposely like not opened any DraftKings or whatever, just because I know myself and I'll sink, not big money, but I know I'll just, I'll flush, $50 down the toilet here and there. So a month ago before training camp, I was like, that was one of my favorite like bets. Cause I was just like, I don't know what I can say on this podcast, but
I think you can say that one. It's okay.
they sucked last year. They sucked. And like, they won 4 games. So I'm just kind of like, like if the quarterback just doesn't throw like whatever they threw, 16 interceptions, and like the offensive line last year was horrible. And the defense should be, we didn't have Judon last year, not that Gonzalez, he was a rookie. So anyway, we're missing some guys. Having seen training camp, I still think they can get over 4.5. Yes. I definitely think the offensive line is pretty much though where it was last year. Like, so that makes me, I'm kind of shocked. I'm like, oh God. So anyway, I think, I'm just hoping they keep it together. I'm glad they're not starting May to start the season. But I think he should, hopefully he's ready to come in and it's week 9 or whatever, week 10.
Yeah.
See if we can't get a little momentum heading into the end of the year, win a couple games or, lose by 1 point to the Ravens or something like that. You know what I'm saying? And then go into next year and try to compete for a playoff spot next year. Not that I thought about it at all, Chris, but that's
Yeah. I feel like you and Brad should make a bet on who wins more games.
I know. I got to look at the Cardinals schedule, but Cardinals, I feel like they're not good, but I didn't feel like they were. I feel like they've already had like the year that we're probably going to have this year, which is sort of like starting the rebuild. You know what I mean? But
yeah, that sounds like it's about. I mean, like Murray came back from injury.
Right.
Our offensive line has been trash for 30 years, give or take.
When did the franchise come into being?
It seemed like a very analytical. I thought you were going to say 2, 3, 30.
So they were. I mean, the Cardinals are one of the oldest franchises in the NFL. They won the NFL championship game back in 1944 before it was the Super Bowl.
I was there.
They were the Chicago Cardinals.
Chicago. Weren't they St. Louis at one point?
I think so. Yeah,
that's St. Louis had 2
from
Cardinals.
Like 71 to like 90, 89 or 91 or something, like somewhere around there, I think.
They used to be in the NFC East, weren't they? Like in the East.
Yep. I used to go and watch them get stomped by Cowboys teams while the ASU the stadium in Tempe was full of Cowboys fans. Yeah, so they were in the NFC East. I can't imagine that I don't know. I can't imagine them going over like 6 wins. New England, 4 or 5 seems about right.
I think Vegas has it right. I think they could get, a little momentum going if they stay healthy and win 5, maybe 6, but I don't have any hopes over that this year.
Or if the Jets are terrible, you get to play them twice if Aaron Rodgers comes in and he's, ayahuasca and not playing particularly well off of injury. And
I'm all for it, but I feel like they could.
Breece Hall just
win the
runs
division this year. I don't know. I'm not a
600 yards on you.
Yeah, well,
should
be fun. I'll watch every game. So
at least we have more market optimism than optimism about our football teams.
Right.
And that's what people come for, is market optimism and NFL pessimism, football pessimism. So if you want to read more from Mike, mostly about investing, but probably some Pats too. Cabot Growth Investor and Cabot Top 10 Trader has 2 advisories. They're on the premium advisories page on the Cabot Wealth Network website. Cabot Growth Investor, both are weekly. Cabot Growth Investor has, what was it, twice monthly issues. And Cabot Top 10 Traders, every sort of a momentum trading service, is every Monday or Tuesday next week because of
We're in
Labor
touch
Day.
twice a week for top 10 and once a week for CGI. So
Yep.
my fingers are bleeding, so it's fine though.
So yeah, check those out if you want to hear more from Mike. Mike, thanks for joining us, and let's hope that you haven't been guilty of it, but we've had guests on the past, especially at the end of July when people have been bullish. It hasn't turned out well, at least in the short term. But let's hope that the pattern doesn't repeat itself this time.
Yeah, I mean, July of last year, us was spot on, right? Like a year later, we're great,
Yeah.
but a month
Right.
later, not
Yeah.
as impressive.
Right.
Yeah.
Right. I think the next big move is up. That's what I'm focused on. It's just timing. I think I don't want to, if we pull back next week, I don't want to get too, unless everything really falls apart, but you don't want to get too close to it. I think I'm trying not to, you know what I mean?
Yeah.
Realizing there could be some fits and starts, but I think, if and when things go with the Fed and hopefully the election isn't too big of a, pothole or anything like that, that I think some of these things can kind of have their second run after that first breakout and go.
Yeah.
From October, November last year, they can kind of have that second leg up, which a lot of things haven't really had yet. So,
yeah. Well, thanks for joining us, Mike, and thanks everyone for joining the latest episode of Street Check. We'll see you next week.
see you guys.